your stop at Northwestern Mutual, your stop at the marketing firm, the creative writing background. How do you think that all helped you versus just going to your dad right away and saying, this is the track I'm going to take?
I think that getting work experience out of someone else's perspective was absolutely hugely valuable, because if I just only ever had that one perspective in my professional career, I don't think I would have as rich and diverse of an experience. You'd be amazed how many accountants don't actually understand the process of running a business or communicating in plain English to their clients. And I think having that marketing background and the creative writing background has been a huge contributor in being able to do that. When you look at my firm, our growth rates, it's all through the roof compared to a lot of other typical accountants. I'll tell you that you shouldn't spend more than 5% of your time on your budget. You want to spend some time on the budget because a dollar saved is a dollar to the bottom line. You can only save so much money, whereas you can grow the top line infinitely. As an accountant, I'm giving entrepreneurs the freedom to set that budget, but spend more time figuring out ways to make the pie bigger rather than shrinking the dollars that you spend.
This is Sparta!
Welcome back to Spartan Leadership, everybody. Josh Gosnick, your host here, as always. But today I'm excited because I have a man on a mission to help business owners grow their profits while paying as little tax as legally possible. With me today, tax professional and CFO coach, owner of TRM CPA, my brother, Tyler McBroom. Welcome to the show.
What's up, Josh? Good to be here. Super fired up. Thanks for having me.
I'm fired up as well. You got some Florida sunshine you're bringing up north with you here
That's
today.
right.
I got my palm trees here in spirit of you. So we're going to hit 80 degrees here for, I think, the first time this spring.
Very nice. That's awesome.
So I'm excited for the day and excited for this conversation because we are going to get into leadership. We're going to get into taxes, and you guys are going to experience Tyler's expertise in both. And he's extremely talented. And I have had many conversations over the last couple of years with Tyler. I'm excited to share some of those thoughts and wisdom with the Spartan audience. So, hell of a mission. I love it. I think almost all of us can get on board with paying as little taxes as humanly or legally possible.
Yeah.
And so I'm excited to just dive into all that stuff. But before we do, let's give everyone a little bit of just a background, right? So you specialize in tax strategy and prep, but that's not your first step in the financial industry because you and I share a spot. But where did you start and how did you get to the TRM CPA that we know today?
Yeah. So I grew up, my dad was an accountant. So he started his first firm when I was 3 months old. So I kind of grew up around the industry of public accounting, if you will, and, going on ski trips with clients when I was a kid and hearing my dad talk about tax strategies. And so, of course, I went as far away from that as possible when I got into, college and actually got my degree in creative writing, wrote a novel in school, tried to get it published. And then, when you start paying your own bills, you realize that it sucks being broke. And so, I said this, and of course, when I was in school, it was, in the run up to, before 2008 and all the crash. And so everything was rosy and amazing. And all the professors were like, it doesn't matter what degree you get, just that you get a degree, you get a job when you graduate, it doesn't matter. So I was like, all right, creative writing sounds fun. And then graduated into the 2008 crash. And turns out an English degree doesn't get you a whole lot in terms of opening doors for a career. So I ended up kind of taking a little bit of a job doing some bookkeeping for my dad, and then went back after a few months of doing that, went and got my MBA, and thought, maybe, tried a few different things, including where we share a background. I did a finance internship at Northwestern Mutual, and I learned some sales skills there. Thought I might combine my English background with my business background and worked for a marketing agency for a little bit. and then realized, because the whole reason I didn't want to be an accountant was because I didn't want to sit at a desk put numbers into a box. And then I realized that working in marketing is pretty much sitting at a desk staring at a computer, just for less money than working in tax. So did that for a little bit, and then finally found my way to, maybe this whole accounting career, tax career isn't such a bad thing, and decided to pursue my CPA after a couple failed other careers, very, very short careers. It was a tough market. And so I was just kind of going around and seeing what might stick, and then ended up going in working for a small firm in the Sacramento area. And I got my feet wet for a couple years doing that, and really kind of started studying, got my CPA license. And then when I had our first daughter, Sadie, had the opportunity to move back to my hometown and kind of work with my dad and learn the ropes of partnering with him and kind of taking over that firm, and then became a partner with him in August 2016. Took that firm from 4 people to 46 people in under 5 years. So from 700,000 to about 5 million in annual revenue. And then kind of got tired of doing the California thing. And so moved to Florida 2 years ago, paid my last California tax bill last year, which felt pretty dang good. And then kind of decided to have, family be family and business be business. And I let my dad run that firm again, and started TRM on my own, a couple of years ago, and carried my partnership with Tony Robbins through that into my new firm. And here we are in Florida, and I've got team members all over the country and clients all over the country. And it's been fun building that. So,
well, many different stops along the way to where you are today. I was thinking as you're telling the story, because this is the second time I've heard it, your stop at Northwestern Mutual, your stop at the marketing firm, obviously the creative writing background. How do you think that all helped you versus just going to your dad right away and saying, this is the track I'm going to take?
Yeah. Well, first off, in terms of the going to my dad right away, I think that getting work experience out of someone else's perspective was absolutely hugely valuable, because if I just only ever had that one perspective in my professional career, I don't think I would have as rich and diverse of an experience. In terms of the marketing experience and the creative writing background and all of that, I think has been a huge benefit in terms of being able to differentiate myself compared to other accountants out there. And specifically in terms of figuring out a better way to speak the language in a way that business owners understand it, versus kind of what I call accountantese that every other accountant speaks. And so the way that I see myself is, yes, I'm an accountant, but really I'm a business owner and a marketer first, and an accountant and a tax pro second. And that's always been, and I think that's been a huge contributor to me being able to build a business. I think a lot of accountants are great at what they do, just like a lot of business owners. They're great at something they did. They had an entrepreneurial seizure and decided to go be in business for themselves. And then they're still just really good at what they do. They're what Tony Robbins calls the artist, right? And so you'd be amazed, even though they're accountants, how many accountants don't actually understand the process of running a business or marketing or communicating in plain English to their clients. So I think having that marketing background and the creative writing background has been a huge contributor to me being able to do that. And so when you look at like my firm compared to when we benchmark against other industry averages in terms of, sort of team members per partner or revenue per partner or, our growth rates, it's all through the roof compared to a lot of other kind of typical accountants.
Yeah, and I've also loved that you've casually just dropped Tony Robbins' name in a couple of times. Let's talk a little bit about this. This has got to be probably the number one question you're asked outside of tax planning. Sure. Is how you were able to formulate that partnership with Tony outside of your just good looks and stage presence, I guess. But like
that's all it was. That's all.
So how did you nurture that relationship? Because Tony's had probably more influence over anyone on the planet outside of, I don't know, maybe John Maxwell? Yeah. I think Tony might have, Tony has probably eclipses that even. So, so of living people, like Tony's touched probably the most people on the planet.
Yeah.
So how did you nurture that relationship and how's that continued to grow?
Yeah, it's been an incredible honor being able to, be partners and friends with him and then speak on his stage as well over the years now. And it kind of started, it was actually, sort of a 3 or 4 year process. It started back when I first became partners with my dad. And he said, Tyler, I don't want to take a cut in pay to bring you on as a partner. So we have to grow this thing. And so I took that to heart and started looking for ways to grow. And one of the ideas that I kind of came up with, well, if I can join some masterminds, I might get connected and get some new clients. And so I joined this small mastermind and kind of got to be known as the tax guy in there. It was called M1. It was March to $1 million. It was for people that were making under $1 million a year in revenue, and got to be known as the tax guy in there. And they asked me to do a 90-day tax and personal finance course to the members. And I said, great. Yeah, I might get some business. This is going to be awesome. And then half the members that joined that tax class were Canadian. And I don't know a lick of Canadian tax law. It's totally different than US. And I was like, great, I don't know what am I going to do with this. But so I was like, well, I still want to make sure that everyone gets value. So I was in an accountant's Facebook group, and I reached out into that group and said, anyone in here from Canada that might want to do a guest appearance for a week and teach about Canadian tax law and might get some clients out of it. Well, the guy that sort of raised his hand and volunteered was the Canadian partner of what I'm the US partner for with Tony at the time. And he told me, so we got connected and he offered to, teach his week. And I said, tell me about this Tony Robbins partnership thing. And so he kind of told me about the global accounting advisors, how Tony offers a second opinion on taxes to go to when they go to Business Mastery. And, we're in the back of the room and we go and you do a bunch of meetings with them and all the attendees. And I said, that sounds like something I'd be interested in, partnering with. How do I go about doing that? And so he gave me the name of the Australian partner, who's the guy who kind of runs the partnership. And we cold emailed him and told him about our firm and said, we think we'd be a great fit. And so he said, great, let's have my assistant set up a meeting for 2 weeks from now. And we had a meeting scheduled with, talking to potentially become Tony Robbins' business partner in the accounting field and at least talk about what that looks like. And the day before the meeting, my dad emailed his assistant and said, hey, I know we're really excited about this meeting. He's in Australia, so the meeting was at 10 o'clock at night, our time. He said, I'm really excited about this meeting, but is there any way we can reschedule to a time that overlaps our business days that's really late at night for us? And he said, sure, we can reschedule. And 3 years later, we got a meeting. Basically we just, we learned a valuable lesson there. Like, and if anyone who's been to a Tony Robbins event knows they go till 10 p.m., midnight, 1 a.m. So like asking for a reschedule because the meeting's a little late was kind of like a lesson there, right? When there's an opportunity, doesn't matter what time of day it is, go show up for it.
Yeah, take it.
But in the meantime, started, so we kept growing other ways. And so that's when I started kind of getting serious about social media. And I just stayed in touch every month or two. Hey, can we get a meeting? Hey, just wanted to follow up. Can we get a meeting? Hey, here's my Instagram account. I'm at 10,000 followers now. I think I'm really providing a lot of value. Can we get a meeting? Hey, I'm at 40,000. Can we get a meeting? Here's my article I wrote for Forbes. Can we get a meeting? Nothing for like 2.5 years. Every month or two, I'd just send just a casual follow-up. And then finally in summer of 2019, got out of the blue, and it'd probably been like 3 or 4 months. I'd kind of started to let it go a little farther in between since I got a reply or since I followed up and said, hey, Tyler, are you free next Tuesday for a 15-minute just check in with Paul, who's the Australian partner? And I said, well, as long as it's not too late. No, I said, I don't care what time it is. Yeah, let's get the meeting, get it on the calendar. And so we showed up. He asked for, kind of our updated numbers. And he said, hey, we had a partnership that didn't work out. You've been following up and we've been kind of paying attention to you and everything you've been doing over the years. If you can hop on a plane to Vegas in 2 weeks for Business Mastery and show up, the partnership's yours. And so we did. It was my daughter's first day of kindergarten. So I showed her, took her to school and then drove straight to the airport. hopped on a plane. We got to set up a little, kind of temporary agreement for that first event. And then, went through and became partners with Tony Robbins. And then at that point in time, he didn't really, we were one of 80 or 90 companies that he was, owner with. So he wasn't active, right, like super close with us. He knew of us, but didn't really, know us, know me personally or anything like that yet. So fast forward to COVID hit, and, about 6 months later, we'd done our first 2 events, and then COVID hit, and all of our leads dried up, and we started just helping people with PPPs and email blasting everybody, including the people that were business mastery attendees. And someone had forwarded one of our PPP emails to Tony's CFO. And I got an email with that forwarded from Tony's CFO saying, "Hey, Tyler, what is this email?" I thought I was getting in trouble for email blasting, the business mastery attendees or something. He said, "Are you free for a call later this afternoon?" And I said, "Sure." Tony Robbins, CFO, asked for a call. I said, so we hop on the call, and he says, "Tell me what you're doing with this PPP stuff." And so I explained we were consulting on how much you could get for a loan, whether or not it would be forgiven, and whether or not you should get it. And he said, "Great." And he hung up. And I was like, "Well, that was kind of cool. I got to talk with Tony's CFO. Well, 2 hours later, I get a text from him and said, "Hey, Tyler, can you hop on a Zoom call with Tony and me in 10 minutes to talk PPP?" And I said, "Sure, let's hop on."
Yep.
And it's me, Tony, and his CFO. He said, "Tyler, nice to see you. You too, Tony." And true to Tony's style, anything Tony does, he goes super deep and drilled. And it always, we're on the meeting until the value has been extracted fully out of that. And so we were on the call for about 3 or 4 hours talking everything PPP. And he's like, "Do you think you could help us with this loan process?" And I said, "Sure, let's do it." And he said, "This has been incredibly helpful." Turns out they talked with their 3 other attorneys they work with and got no answers. Like, "Tyler, this has been really helpful. I love the way that you communicate. Let's you and me do a live webinar to the entire country next week. Here's my private email and my personal cell phone number. Text me if you need anything. I'm a texter. I'll have my team set it all up." And then we, did the webinar and did 12,000 people live with Tony. And, and then the next business master is a few months later. And the guy who normally speaks there is the Australian partner, and he couldn't fly out because of COVID. And so I said, "I don't know what your plans are, but I'd love to throw my hat in the ring." And I reached out to his creative team, and they, sure enough, the next week they said, "We'd love to have you on stage." And that's how I'm speaking on stage at Business Mastery, and I'll be there in a couple months. So
That's awesome.
that's kind of the process. And if I hadn't gone and created content every single day for 3 years straight, when I got to that meeting with Tony, I wouldn't have had the practice of the communication and all of that. And so it's putting in those reps throughout the years. So
there's so many good lessons I want to make sure everyone captures there. A, Tyler's dad screwed up the first meeting.
I don't want to throw my dad under the bus.
Well, either way. So bottom line, the first meeting gets screwed up, regardless of whose fault it was. Mm-hmm. But then they don't get back on, right? So a lot of people would have just chalked it up as a loss right then and there. And like, "Oh, I blew it," right? A lot of people would have, after a couple months, maybe even a couple weeks of following up and getting that no or just a ghosting, would have quit there. You kept following up for 2.5 years. You kept making content. You kept growing your follower base. And because you were creating that content, it gave you your chops on speaking and communicating so that your message was more refined for when you did get the opportunity with Tony to go on this PPP webinar, to go on his business mastery stage. There was a comfortability there. Obviously, his team was watching you. Like, there's so many, you never know who's watching, first of all.
Yeah.
But
I got another lesson about that. So last year, I suddenly, out of the blue, Damon John from Shark Tank followed me on Instagram, and I was like, "Oh, that's kind of cool." And then about a day or two later, I got a DM from him saying, "Hey, Tyler, my team's been following your stuff. They love it. We'd love to collaborate somehow." And then I ended up doing a live webinar with Damon John, and I had no clue that he was, and I was asking, "How did you end up following me?" He's like, "I don't know. Mark Zuckerberg told me to, because of the algorithm," right? I just found it somehow. So again, evidence of you never know who's watching on that.
Right. That's great further evidence. So you guys, make sure that you're consistent. If you have a dream of speaking, one of the easiest things you can do is create daily content. If you have a dream of writing, it could be your writing content, it could be speaking content. It's interesting, and listen, we usually do this at the end of the show, but I want to make sure that everyone gets it now. Tyler, where is the best place for them to follow you?
Yeah. So Instagram is probably where I'm most active, at Tyler McBroom, just my name. And then YouTube also is putting out a lot of content on YouTube as well, which is the same, just Tyler McBroom.
Tyler McBroom. All right. So everyone follow him. Every time I've referred Tyler out for people to follow, they've all come back to his content's great, right? They're learning. Tyler's putting out info that you're going to learn from, that you can either ask your CPA, or if your CPA doesn't give you the right answers, then obviously Tyler's team is available. So it's one of those things, but you're going to be learning from his content. I guarantee you that, because I'm learning from it constantly. So good. And we'll repeat it at the end of the show, but I want to make sure we got it out now. All right. So with your expertise in the industry, I'm curious about which recent headline is impacting your business operations the most right now, because there's been a lot, and the economy is kind of in a bit of a loop right now. So, what were or are for those who have filed an extension, the top obstacles that clients have faced in either the 22 filing season or some of the things in the headlines now that are impacting how we're doing planning?
Yeah, I think probably the biggest one that comes up the most, that I actually want to dispel the sort of the rumors around, is those 87,000 IRS agents. That's been good for our business, because everyone's freaking out about it. But actually, if you drill down in the details of it, about half of those agents are replacing retiring agents, and the other half really are just catching up the backlog. There are people who have filed their 2020 tax returns who are just barely getting their refunds now, and they filed them on time. The IRS since COVID has been so far backlogged that it's been actually detrimental to the taxpayer because of that. So it's the scary, and it's good headline for people who want to use it to fearmonger. But it's not as something that you necessarily need to worry about you're going to go and get audited overnight just because the IRS is going and hiring some of these people. So I think that's just an important thing to be aware of. Yeah. In terms of, there's been a lot of we're actually finally settling down from all the COVID, like PPP, and there's still a little bit of employee retention credit that you can go get. And for those of you who maybe haven't heard about the employee retention credit,
if you've been living under a rock,
they say because there's every influencer under the sun has been pushing that, whether they know about taxes or not. And I think that's actually the way more than the 87,000 IRS agents. A red flag to be concerned about is there's a lot of these ERC mills that are actually helping people file fraudulent employee retention credits without even knowing it. And they're just, because they're collecting a success fee for it, and they're just fudging the numbers and applying for it. And because the IRS or they're just sending people money in sort of free handouts, but there's a lot of people that are going to get walloped that already paid their success fee to the fly-by-night operation that's going to be out of business, or at least ghosted and not replying, that are when they get audited are going to get their kind of have an issue. So I think it's really, really important for those of you who got the employee retention credit, that when you have your accountant file your tax return, that they double check that, and make sure that the numbers are legitimate. And if you're thinking about getting it, that you work with a reputable company that's been doing not just that their first rodeo isn't the employee retention credit, because that could get a lot of people into some hot water on that.
Yes.
So yeah, so
good one.
That's really important to be aware of. So
good one.
Those are the two that I would say kind of are the most popular things that I've seen kind of come up in recent times.
Yeah. So sticking on the business owner theme, what do they need to be aware of when it comes to taxes, or more aware of, I should say, because you talk a lot about this on your content, and it's a lot of things that I've learned from you. Is what are the things that where business owners aren't taking advantage of that they should be taking advantage of on a more regular basis?
Yeah. So the number one thing before we get into any like sort of unique strategies that they use, which we can talk about that if you want to, or we have time. The biggest thing that almost no business owner is taking advantage of is actually doing tax planning. So what tax planning is it's meeting with your accountant, your CPA before the end of the year, at the very least, or ideally throughout the year, and actually looking at your numbers and proactively giving you a set of action items to do something about your tax bill. Most people think that the time of year to meet with your accountant is tax time. We just finished tax season, right? They see the TurboTax ad on the Super Bowl and they go, oh crap, that's right. I got to go dig all the receipts that I maybe saved out of the shoebox that's sitting in the corner of my office, print out all my bank statements, drop them on my accountant's desk, and anxiously wait 2 or 3 weeks while they prepare a tax return and tell me how much I owe. That's actually the least effective time to meet with your accountant, because number one, it's the time of year that everyone thinks is just meet with your accountant. So we're all busy and overwhelmed and stressed out. And number two, we're just historians filling out the forms at that point. So you want to meet before year end, because as a business owner, there's so much you can do about your tax bill that you can't as an employee. So when you're an employee, kind of a W-2 working for the man, or working for the person these days, your tax return kind of has one correct answer. You can buy a home, yes, write off some mortgage interest. You can give away some money to charity. You can, pay a lot in medical bills, but pretty much your tax return has one correct answer. When you're a business owner, it opens up a whole new world of tax strategies available to you that you can actually do something about. That's why I have a little magic lamp on my little hutch in the back there, because kind of like the genie of a whole new world of tax planning strategies. Literally, the tax code is so thick that if we printed it out and I held it in front of me, and Josh, you stood across the room with a Colt 45 Magnum and fired it at me, it would not penetrate the tax code because it's so thick. And all of that, almost all of there's some of that for the benefits of lobbyists and the inside trading going on in Congress. We won't get into that, all that political stuff, but the most of it's for business owners, right? And so you want to make sure that you're doing tax planning, because that's one of the huge, most advantageous things that you have as a business owner over being an employee.
Yeah. So that's such a good point. And it's analogous to financial planning, although financial planning is a lot more in the future. We're thinking 20 years out, 30 years out, as you think about retirement or kids' education or whatever it might be. However, so this is short term. It's still the same analogy as there's very little I could have done as a financial planner at 65 years old for you to retire appropriately versus if I had met with you at age 40. Yeah. Right. So very similar analogy is if you can meet with Tyler and his team or your CPA in advance, you can actually plan some things out to mitigate your tax bill. I loved when Donald Trump was running for president originally. I remember the specific interview when he was very open and honest about how he fought like hell to pay zero in tax. Yeah. And he believes that everyone should as well. And so the left lambasts him, saying that he's cheating, when all he's done is hired really smart corporate tax accountants to navigate the 100,000 or whatever pages thick the tax code is now, to make sure that him and his companies are paying as legally little as possible, which we should all be doing.
Right. Yeah. And just to address how most of what Trump did to pay that little amount of tax was through something called a cost segregation study, which is sort of an advanced strategy specifically in the real estate space that allows you to accelerate depreciation significantly on a lot of your real estate properties. So that's one of the things that's been really, really popular over the last few years, with bonus depreciation being at now it's a little bit less of an advantage as it was for the last 6-7 years, but it's still a great way to take massive deductions right now using something called the cost segregation study.
Yeah. This may be more simple, but I always want to give tactical as well. When is the So if you're not a business owner, because all business owners need a CPA, and preferably one like Tyler that's doing planning, not just filling out paperwork. But if you're not a business owner, when else would you need a CPA?
I would say if you're, usually it's either a business owner, or if you're a very high net worth individual, and by high, very high net worth, I'd say at least north of $5 or $10 million of net worth. Cause then there's more trust planning, and that's really not my area of expertise, but I have some friends and colleagues who are in that area. And that's at a point where you have some trust stuff that you do and you're setting things up. Or if you're if you are a W-2 but a real estate professional, and there's things that you're looking to do to mitigate your taxes through some of those real estate advantages, then you'd want to talk with someone, a CPA around that. And then the other kind of life event time when it would probably make sense is if you come into a lot of money through like an inheritance, that you're suddenly dealing, and that's a really important time to talk with someone like you, Josh, as well, right? With financial planning, but also tax planning, to make sure that you're doing everything you can to set yourself up the right way from the time you receive that money forward.
Yep. Yeah. I always said the trifecta of good advisors in your life, as far as it's financially put, is a great CPA, a great financial advisor, and a great estate planning attorney.
Mm-hmm. Absolutely.
And if you have those three relationships, you can help yourself out a lot by getting educated by them on how to receive, allocate, and plan money appropriately.
For sure.
So in that vein, I was thinking about what to look for.
Mm-hmm.
What do those want, like, in your opinion? And obviously you've been doing this a long time, and you're biased as well. You already mentioned the planning aspect.
Yeah.
But what should people look for when they're hiring a CPA? Because I know you've talked a lot about, most CPAs that I know are rather nice,
mm-hmm.
but they're paper pushers. And you've mentioned that in some of your content as well.
Yeah.
They fill out the boxes. They're just, kind of doing their job, and they're nice guys.
Yeah.
And I actually have a phrase for that, NGB. And I learned this from one of my mentors. There's NGBs in this world, and there's NGAs. NGB stands for nice guy, but NGA stands for nice guy, and he's a great accountant. And you could switch that guy to gal, whatever you want to do, but
whichever
it's a good term.
Yeah, definitely. So I'll sort of start by answering what to look for by answering what not to look for. And the first one is kind of what you mentioned. They're really, really nice, but like we talked about, all they do is fill out the forms. There's a lot of firms out there that they're tax return mills, and that's fine. It's just a different business model. But what they do is they grind it out, and they work 80 hours a week during tax season and maybe an extension season. And the rest of the year they shut down, or they just work a couple of days a week. And that's all they do, is they're there to fill out your tax returns. And that's fine if you're a W-2, but to me, you're doing yourself a disservice if you don't at least, if they're going to do your tax prep, you need to at least have an additional advisor who's helping with the tax planning too, because you're leaving a lot of money on the table. The other thing I would look for, kind of I had sort of a top three red flags that your accountant might be costing you money. One of them was that. The second is that they, when you come to them with a strategy that you maybe heard of or read about, they look for ways that can't work rather than ways that can. I think to echo Tony Robbins, he always talks about the importance of, if you want to elevate the quality of your life, you elevate the quality of the questions you ask yourself. And yes, I've taken that philosophy and applied it to our tax planning process and how we operate our firm. And I think that's a critical question and a mindset that you should have in your accountant, is if they're spending more time asking, why can't it work, rather than, oh, that's interesting, let me find a way that we can make that work. Let me poke some holes, but look for ways that we can implement that strategy versus ways to just shoot it down. I think that's a potential flag. So you want to look for that, the opposite of that mindset, which is, hey, what's the next way that we can layer on more value? And then another red flag question that I've heard people at least complain about to me that their accountant says is, congratulations, you made a bunch of money. Paying taxes is a good thing. Like, there's nothing we can do about your taxes. It's a great thing to pay lots of taxes because it means you made a lot of money. And yes, there's an element of that, because you don't want, if you tax plan yourself to where you're paying zero taxes, then you can't go qualify for a loan. Can't even go qualify for a loan for a massage chair at Sharper Image if they're even still
or disability insurance for that matter.
Or disability insurance.
People, that if they get all the way down, the disability insurance underwriter is going to go, well, what income are we actually replacing?
Yeah, exactly. That's a good point. Yeah. So it's absolutely critical to balance that, but just carte blanche saying it is what it is something you don't want to look for. On the other side, what to look for is, someone who does do planning throughout the year, that has a full, I would say also isn't just a one man or a one woman shop, because if they go down, so does your entire financial picture as it relates to your business. I would recommend someone who has a team behind them where the whole team kind of is involved in knowing what you're doing. And a lot of people want to work with the guy, or they want to work with, the owner. That's actually a detriment to you, because it's putting you at a high, what's called a concentration risk. And that's true if you have too many clients in one sector, or too many, then you run the risk of going out of business if that sector goes down. If there's one person with all the knowledge of your tax situation in their head, and they suddenly go out of business, or they get sick, or something happens to them, then you're toast, right? So you want to have someone with a full team approach. Ideally, someone who's had experience in your line of work, or at least a line of work in your business that's something that's similar that can apply. So it has experience in your niche. It doesn't mean that they have to be super, super drilled down and that's all that they work in, because business is business and strategies can apply across the board. But at least having some familiarity with your business is important. And then I think someone that you just enjoy getting along with, I think, is important too, because they really should be one of your partners in your business, just like a financial planner, right? A financial advisor should be someone that you enjoy working with. You look forward to those meetings, because if you just kind of grit your teeth, and just grin and bear it and deal with it, you're only going to show up at as minimum amount as possible. Whereas if you have someone you really enjoy working with, then you're going to look forward to going and having those meetings a couple times a year. And it's going to turn it into a pleasure rather than a pain source. Because most people think working with their accountant is like, oh, I got to go get my root canal, and so you don't want it to be that. You want it to be someone you enjoy.
Yeah, I'll add one more, that they know and they express their limitations.
Yeah,
you've already heard in this conversation between Tyler and I, he said his expertise is not in estate trusts or planning in that regard, but he has some contacts that it would. He also will call me about financial planning questions. That's a red flag I've noticed as I've reviewed, thousands of financial plans. Some of the ones that I've seen out there, when I see an accounting firm that also has a financial planning firm as a part of it, not to say that this is 100% always the case, but what can happen is there can be a conflict of interest there, because the accountant can cover up for some misgivings of the advisor and vice versa.
Yeah.
And so that's one thing that I just, by practice for me, I've been in this industry for almost 20 years. Like, I just always wanted to steer clients or people away from that situations. I have your tax advisor be your tax advisor, have your financial planner be your financial planner, and your estate planning attorney be your estate planning attorney. So that that there's separation, like it's almost like, the house and state, like you have a clear separation that should be protecting you and looking out for you. That would just be one thing I'd add there.
Well, something, I think that's a great point, and something I'll add on that, kind of tying it back to something I said earlier, is remember how thick I said the tax code is? Like how you could print it out and the bullet would not pierce because it's so thick. No one can know every little wrinkle of every part of the tax code for every entity type and every business type. It's a mathematical impossibility. And so the best people know how to get specific and get drilled down on an area of expertise, and then lean on those resources of other people who've picked other areas to be experts in. And so I think that to your point, I would absolutely echo that the best professionals know when to say no.
Yeah, exactly. And when say, I don't know, let me find out for you.
Exactly.
Right. So that's
a great question. And I know someone who has the answer.
Exactly. That's a case of humility, and that's someone that you want to be able to trust in that regard. So, all right, let's move on a little bit. You mentioned in a recent post that accountants using AI will put those not using AI out of business. Why do you feel that's true?
Well, I think it's true for the same reasons that the people that moved to the cloud first had a serious advantage over the people that didn't, because they can now hire talent and have access to a talent pool from all over the world, and they can have access to a client pool from all over, the world or the country or wherever, they can broaden their reach. I think that with the next evolution of that is AI. And so right now there's a serious shortage of accountants. It's like, if you talk to any firm that provides any sort of value and does a decent job for their clients, they're busier than they can handle. The constraint to growth is talent. And so if you can ease that constraint, there's two ways you can ease that constraint. There's go get more people, which is becoming increasingly difficult, or there's leverage technology to create more capacity with the same amount of people. And so I think that's what AI is going to do. If we can, it's soon it's going to plug into our Outlooks and it's going to write our email replies for us, right? That's coming. Might already. I mean, I'm not super expert in AI, but that might already be here in some capacity. We've already got those auto suggestions. It's only going to get better and better.
Yep.
And so the more there's in any industry, but especially knowledge industries like accounting, there's activities that are what are called sort of compliance activities, which are not value add. They're just, you got to do it. Right. And then there's value add activities, which is the thinking and the proactive advising and the things that really add the value. And so I think that what AI is going to do is it's going to allow us to spend almost no time on the non-value add activities so that we can spend that much more time on all the value add activities. And it's going to exponentially increase our ability to serve and add more value to our clients compared to the people who are still typing out their emails, or it's the same as writing a letter by hand, right? It's just it's less efficient. And for someone like me, who's in a position where I've got an audience who's, that the more efficient we can get, I have an audience. So I'm actually someone who builds out an email list, and I'm thinking about it from a brand building and a list building to build an asset. Almost no accountants are thinking like that because they're in their little box and they're hoping they'll get some referrals.
Yep.
So if I can take that technology, bolt it on to all the value that we're already adding above and beyond the way that we're delivering our service, and then leverage that across my network and my community, then I've got a huge advantage compared to the guy just running the local shop that's hoping people will wander in his door on Main Street, right? So that I think those are a few of the reasons that accountants who use AI, just like any tech, are going to put other, those accountants who don't, out of business.
Let me see if I can simplify based on our conversation today. Those that are just filling out paperwork and checking boxes will be extinct as AI continues to evolve. Those that are actually doing planning and meeting with their clients and communicating effectively with their clients to add value, like Tyler said, will take over the entire market share.
Absolutely. And I think that's true of any industry.
Yes,
I think,
I agree.
If you have a marketing agency, that's all getting smarter and smarter and smarter. So you figure out new ways to add value. Same thing with, even if you own products, like if you can use AI to scale the way that you create experiences for your customers, and it frees you up to add more, personal touches. There's just the ways that you can just get creative and add more value are endless with technology these days.
All right, let's pivot again. Let's go to leadership. You've built a firm with an amazing reputation, and now you're coaching. You have a team making a huge impact on business owners nationwide, be it with Business Mastery with Tony Robbins, plus some of the masterminding stuff you're doing. Let's talk about leadership behind that compliment. So How did you go about building your business culture and embedding your values throughout that culture, especially, I think, as you transitioned from California to Florida and really branched off from your dad and really started, because you branched off and like, I remember you having that conversation. There was fear there. Like, you're still going to have the same machine that you had with Tony without all the people that you built up at your dad's firm. Yeah. And now you're growing your team at a really fast pace as well. So you're well versed to be able to speak on this.
Yeah. I mean, we walked away from basically a $5 million firm to almost not entirely start over, but pretty close to it. And then, like you say, you throw a marketing machine that's generating $1 to $2 million a year of growth, and you throw that on a $100,000 company, and that's overwhelming to say the least, right? But we've been virtual from the ground up, like from the very beginning here, and that's presented its own set of challenges, but also opportunities. Whereas before we had kind of two main offices, but also virtual team members. And I actually feel like you kind of have to go all in one or all in the other, because what tends to happen is if some are virtual and some are in person, the virtual people kind of tend to feel like the odd man out when you're doing your meetings. And so it's been, for us, really good having a fully virtual team. And then we get the team together in person a couple times a year to connect, break bread, recast the vision. We do an element of contribution where we do some giving, and, like we're just in San Antonio and we painted over some graffiti in the city, and then an element of fun too. We go have some fun with the team. So we've been very, very intentional with, I've always been a huge advocate of culture. Management is something that came I realized that there's not a lot of people teaching about management. Even if you go to business school, they teach about, operations and constraints and marketing. No one really teaches about how the heck do you get work out of people? How do you manage them? How do you follow up? So that's been a really interesting kind of challenge. But culture has always been something that I've put a huge emphasis on, and been a firm believer that you have to design it, otherwise it will design itself. And so that's been really intentional. And I'm really, really, really proud of, so one of the things we do is we get feedback from all of our team members, top to bottom. So we get quarterly, we have a type form we send out, and we ask for starts, stops, and continues. So what are some things we aren't doing that we should start on our team? What are some things that we are doing, that we are doing that are bad, that you don't like, that we should stop? And what are some things that are going great that we should continue? And we get those from every single person in the organization. And then we ask, on a scale of 1 to 10, how likely is it that you'd recommend working here? And I'm probably the most proud of all the things I've done. You speaking on stage and all those things, Instagram and everything. We're a perfect 10 internally by our team. Like everyone on the team says it's a 10 out of 10 working here. So we got something going that's really special right now, which is awesome. So we do daily huddles. That's the number one thing that comes up in our continues. Almost every single person puts that in our continues every quarter. It's like every quarter that's in the continues. So
and what do you do in your daily huddles, do you think, that make it so special?
Well, I think because we're a fully virtual team, it's an opportunity to get everyone connecting face to face rather than just going off and doing their thing. So just to give you real tactical, what we do with our actual agenda for the daily huddle is everyone shares a positive focus. So it's like something positive, personal or professional, that's going on in their day. It's just an opportunity to share a personal anecdote. And so that, my social media guy learns about what's going on in the personal life of one of our staff accountants that lives 2,000 miles away every single day. So it's an opportunity to connect there. So everyone goes around and shares that one personal thing. And then everyone goes around and shares their top priority for the day. And then everyone goes around and shares if they have anything that's stuck where they need help with. And you don't solve it on the huddle, because then you'll get bogged down with everyone's sitting there while two people hash out an issue. But it's, hey, I've got an issue with this. Okay, I can solve it. Let's connect after the huddle. And so we do those 3 rounds. And then we finish with a core value cheer. And that sounds really cheesy, but we've got our list of core values. And our core values they're one word and then a descriptor, a descriptive sentence afterwards. So like positivity, we approach challenges with optimism. And so we used to just do the word, and people say positivity, and then everyone shouts positivity. And I make a different person choose the value each day. But then no one was learning what it actually means. Like, what does teamwork really mean in our company? What does positivity really mean? What does excellence mean? And so now the person that I choose to pick the value, they pick the sentence descriptor, and then everyone else has to echo the actual value name. So they'll say,
nice.
They'll say, we go above and beyond in all we do. And then the whole team will go excellence. And so it really hammers home. So everyone knows our core values by heart because we say them every single day at the end of our huddles.
So that's so good. There's so much actual, like really good wisdom that Tyler just said really quickly.
And before you unpack it, I'll add one more thing. On our we do a weekly meeting on every Monday to recap our quarterly goals that we set and our progress on them. And then after I announce the goals, I announce a core value. I share a core value story that is shared by someone else from the recognizing a team member for living out that value. So I have team members all day throughout the week sending me stories when they see another team member living out one of the values. They say what that value is and why they're giving that shout out. And each Monday, the person that I recognize who shared the story and the person who is the recipient of that they lived out the value, we buy them lunch for the day. So we send them DoorDash tokens so they get lunch bought that day, because I want to recognize and reward the person who's acknowledging the core value and also the person who's living that out. So that right there, everybody listen to that. If you're building a culture and you want your team to understand core values, that right there. So do you run on EOS, by the way? I don't. I've read Traction. We kind of started on EOS and then we're scaling up as kind of more, the frame, which is similar type of framework Traction.
Well, the reason I bring that up, as I became an EOS implementer 6 months ago, as I went through that training, that is one of the things I noticed right away is the core value call out. And so in EOS meetings, when we're at a quarterly, they're doing that on the microphones live, right? So we're making sure that we example what we're preaching to our clients as well. Right. So what you're doing there, people always, how do I get the core values distilled down all through all the people? Exactly what Tyler just said. You call it out and better yet, you have your people witness someone else. Like what Tyler said was excellence. A story of excellence, gives it to Tyler. Tyler buys them lunch. It's talked about on the call. So everyone's drilling in from brand new to 10 years in. They're learning the core values inside and out through those weekly huddles. So to go back and unpack a little bit of what Tyler also mentioned, he's got a fully virtual team. They're doing daily huddles. Keeping them engaged that way. The other thing is twice a year meetups. So they're doing service, they're having fun together. I'm sure there's some learning involved because Tyler doesn't do anything that doesn't have learning involved. And so making sure that you're having those meetups, that human to human connection in an all virtual world, still having those meetups, or whether it's a celebration, whether it's a day of service, whatever it may be, is going to build those bonds tighter. And there's probably a couple other things that I'm missing right now, but bottom line is what you're doing to instill that culture. I want everyone that's building a business right now, really listen in on that, because rewind, play it a couple times. That was really, really some gold that you were dropped there, because you've done this in just such a short period of time since leaving your dad's firm and starting your own all over again. While building the business, you still have to work on the culture. Oh, that was the other thing. As I remember that, you said something really smart that a lot of people don't understand is if you're not intentionally building the culture is still getting built.
For sure.
And so a lot of people don't understand that. Is like, how did all of a sudden they wake up one day and it's like, how did this happen? Well, you weren't intentional about building the culture that you wanted. So a culture automatically builds itself with or without you.
Absolutely.
So if you're the leader, you got to direct and steward the ship. Otherwise, this culture is going to be built without your guidance, regardless of if you wanted that culture or not.
And culture does not mean foosball tables in the lobby. There's no right or wrong culture. It's whatever you want the culture to be. It can be a stoic, all serious culture if you want that to be what you're building. It can be a crack the whip, eat what you kill culture, or it can be a teamwork culture. It can be a culture of accountability, of metrics, of tracking everything. There's no right or wrong of what the culture should be. It's just important that you design it with intention.
With intention. Exactly. All right. Last question as we're wrapping up. I never prep anyone for this question, so I want your gut. It's something that you would, whatever hill you would die on. What's an unpopular belief? Unpopular. Okay. Unpopular belief that you hold to be true that most others would disagree with.
Gosh, an unpopular belief. I'll go with, in the accounting space. I think that an unpopular belief that is probably not consistent with what a lot of accountants would say is that even though I'm an accountant, I'll tell you that you shouldn't spend more than 5% of your time on your budget. I think you want to spend some time on the budget because a dollar saved is a dollar to the bottom line. But where most people become sort of slaves to their budget related to the profitability of their business and monitoring cash flow is you can't build infinite value by through a budget. You can only save so much money, whereas you can grow the top line infinitely. And so I think that it's absolutely critical to focus on and have a budget. But as an accountant, I'm giving you entrepreneurs the freedom to, yes, set that budget, but spend more time figuring out ways to make the pie bigger rather than shrinking the dollars that you spend. Whenever we do these, kind of consulting where we have the team involved on where they share their numbers with the whole team and maybe tie bonuses to profitability or something, almost all team members, especially if you give it to accountants, will look for ways to cut costs. Whereas if you play the numbers and just grow the revenue 20%, it makes it, and keep your costs the same, makes it huge, it's infinitely more powerful. So I think have a budget, but don't spend all your time on the budget. And that's as an accountant saying that.
That's good. I got one too. 10% flat tax is what we should be top line at the federal level. I don't know if that's unpopular anymore though, but it should be
it would simplify things. It might make my job a little less valuable, but
yeah, it might wipe out a CPA's job.
Yeah. I have a love-hate relationship with the all the tax code because it's frustrating and annoying, but it keeps me, in demand. So
that's right. That is right. Well, thank you so much for your time today, Tyler. Everyone needs to share this episode. I know we got your Instagram handle and YouTube, but if someone wanted to talk to you about you becoming their CPA, how would they reach out?
Yeah. So our firm website is just trm.cpa. So TRM as in my initials. That's CPA. So you can only get the .cpa domain if you have a licensed CPA firm. So that's how it's not a ripoff. And then just basically fill out the form there, or shoot me a DM on Instagram. That's where I'm probably most active in terms of connecting with people. And then we can talk, get something set up. So
awesome.
Yeah.
Well, thanks for dropping so much knowledge on the audience today, Tyler. Always good to spend some time with you. Spartans, you know what to do. Share this episode. I know you learned a lot from Tyler today, both leadership and accounting. Remember, good and great are the enemies of possible. Lead like a Spartan today.